Pandemic pushed people into what's called revenge spending, where people took big trips, luxury splurges happened, shopping sprees to make up for the lost time in a way. But now with inflation and job uncertainty and also higher living costs, a new trend is emerging. People are flipping the script, it seems, and going all in on savings. It's called revenge saving. Let's just break it down for you. It is the opposite of splurging, basically. Instead of spending on luxury or experiences, you save with intention. Some call it a personal rebound after a phase of financial overshooting. Though globally the savings trend is making a comeback, but the numbers narrating a different story all overall. The personal savings rate standing at 4.4% as of July 2025. In India, households saved 18.1% of the GDP in FY24. Meanwhile, the Eurozone showing an average savings rate of 12% of disposable income in 2024. This trend showing that people are starting to rein in spending and focus on financial security driven by economic uncertainty, inflation and job concerns. Why it matters now is the immediate question. Revenge saving provides a financial safety net. 67% of the Americans still live paycheck to paycheck. Savings can reduce the stress and also protect your future. How to practice revenge saving effectively is also a question. Find a budgeting strategy that fits you. For example, you can choose 50-20-30, zero-based or envelope method. Identify the small spending cuts like skipping extra subscriptions or the daily takeout. Direct that money into savings. Try no spend challenges. For example, go the next 24 hours without spending any money and set aside whatever amount you would have normally used. Even small steps add up quickly. At the end, revenge saving is not about denial. It's about intentional spending or essential spending. Start small. Automate the savings and you can watch your financial confidence grow. For years now, cashless insurance worked only if you chose a hospital from your insurer's list in India. But if you happen to go outside that list, you have to pay upfront at the hospitals and later get a reimbursement from your insurer. But now the General Insurance Council has introduced Cashless Everywhere facility last year. And what exactly is it? Let's just first understand what is cashless facility in your health insurance. In simple terms, cashless option in your health insurance means you walk into a hospital, get treated and leave without paying. In this type of health insurance, the insurer picks up the bill directly. But this is possible only if the hospital had a tie-up with your insurer. Last year, the General Insurance Council launched a new initiative, Cashless Everywhere. It was done with the objective of easing the process of bill payment for patients. And according to this facility, a patient should be able to opt for cashless service in any hospital, whether it is a part of his insurance company's network or not. Hence, it's not essential for a tie-up to exist between the hospital and the insurer for a patient to avail of the cashless service. Though this new plan had removed the hospital list restrictions, but it has certain terms and conditions. For elective procedures, the customer should intimate the insurance company at least 48 hours prior to admission. For emergency treatment, the customer needs to intimate the insurance company within 48 hours of admission. But here's where the fine print kicks in. The Insurance Council may have launched the scheme, but Indian Insurance Regulatory and Development Authority has not notified it yet, which means hospitals are not bound to follow it. And many can still demand upfront payments, leaving patients stuck with paperwork. Though on paper, cashless everywhere looks like a revolution, but until regulation makes it binding, the promise of no upfront payment remains just that, a promise.